All right, let's talk about what's moving the markets today, November 4th. It's been a wild one, full of earnings surprises, big analyst calls, and some major strategic moves. You're going to want to see this. Let's get right into it. Earnings season. It's supposed to be simple, right? Good earnings mean the stock goes up, bad earnings mean it goes down. Well, not today. Today, the market felt like it was in the upside down, punishing companies that did well and leaving everyone scratching their heads. So what is going on? Okay, first up, let's unpack these earnings reports. We've got some clear winners, some definite losers, and a few that, well, they're just total head scratchers. And this is a perfect example of the two extremes you see. On one side, you've got Compass, the real estate tech company. I mean, they just crushed it. Revenue shot up almost 24%, but here's the really impressive part. Their transaction volume grew over 21% when the rest of the market only grew by 2%. That is what you call taking market share. And then you've got the other side of the coin, Progressive. The insurance giant missed on everything, revenue, earnings, and the stock got hammered for it, dropping over 7% before the market even opened. A classic case of feast or famine. Okay, but that's the straightforward stuff. The real story, the one that makes you go, is when the results aren't so black and white. What happens when a company's report is just a mess of good news and bad news all mixed together?
Let's take a look at Upstart, the lending platform. Talk about confusing. First, they missed on revenue. Ouch. Then they lowered their guidance for the whole year. That's usually a death sentence for a stock. But then, you get to the earnings per share and it's like, which report do you believe? One source says they beat, another says they missed by a mile. Now this probably comes down to some accounting geekery, but for you and me, it's just total chaos.
And if you thought that was weird, get a load of FuboTV. This one is maybe the most baffling of all. They beat expectations on revenue and on earnings. That's a win, right? Should be a great day for the stock. Nope, it tanked, falling almost 12%. So what on earth happened? Well, it turns out Wall Street's completely ignored those nice headline numbers and instead focused on the ugly details hiding underneath. Ad revenue was down 7% and international subscribers dropped by almost 10%. A perfect reminder that the devil is always in the details. So if earnings can be this much of a roller coaster, what else can move a stock in a big way? Well, sometimes it's just one opinion from one powerful firm. Let's look at how that can completely change the game for a company, literally overnight.
It's kind of wild when you think about it. A company can put out pages and pages of data, but at the end of the day, a lot of investors are just waiting for one thing, a thumbs up from a big Wall Street bank. And when they get it, boom, the reaction can be huge.
And that is exactly what just happened with Wayfair. Citi came out of nowhere, upgraded the stock from neutral all the way up to a buy, and slapped a $65 price target on it. Just like that, one analyst note made Wayfair the single best performing stock in the entire S&P 500 for the day. So the big question is, why? And here's the logic, right from the source. The analyst pointed to two key things. First, Wayfair's getting way better at actually making money from what it sells. That's what they mean by margin improvement. And second, it looks like people are finally starting to buy couches and tables again after a long slump, or stabilizing consumer demand. So even though Wayfair's own earnings report wasn't perfect, this optimistic view of the future from Citi was all the market cared about. Okay, so we've covered earnings and analyst ratings, but that's not all that was going on. We also saw some really interesting strategic moves, companies making deals and signing partnerships to get themselves ready for future growth. Check out LifeMD, for instance. They just made a super smart move by selling off most of a software business they owned. This does two really important things for them. One, it gives them an instant $22 million in cash. And two, and this is the big one, it lets them stop worrying about that side business and focus 100% on what they're really good at, virtual care and pharmacy services. It's a classic case of trimming the fat to build a stronger company. And it wasn't just about selling things off. It was also about teaming up. SoFi's partnering with United Airlines. That's a clever way to get their new rewards debit card in front of tons of frequent flyers. And then you have Carvana, the online car dealer, trying to connect with a younger crowd by sponsoring Stanford sports teams. Both of these moves are all about planting seeds for future growth. All right, so that was a whirlwind of a day. So what's next? What should we be keeping an eye on? Let's talk about the big reports and insider moves that are coming up. Don't think for a second the earnings parade is over. It's not. Later today, we've got Allstate, Duolingo, and InMode. Tomorrow, keep an eye out for LifeMD and Doximity. And then, of course, the big kahuna next week is Disney. Every single one of these is another piece of the puzzle. And last but not least, let's play What Are the Insiders Doing? We saw two really interesting filings. Over at Lovesac, the CEO filed what's called a Form 4. That means he's already sold about 10,000 shares. The deal is done. But then at Netflix, an insider filed a Form 144. Now that's different. It's not a sale yet. It's more like a heads up that they plan to sell stocks sometime soon. Both are signals worth watching, but they mean slightly different things.
So that really brings us to the big takeaway for the day. You've got insiders selling stock, you've got analysts changing the game with a single upgrade, and you've got earnings reports that make no sense. So the real question is, how do you even begin to separate what's real, the signal, from all of that chaos and noise? That was the big challenge today, and honestly, it's the challenge every single day in the market.